Welcome to TheoTrade. This is Don Kaufman. It's March 20th, 2019, and you are watching the TheoTrade evening video. With just about 9 minutes left to play in the period, the S&Ps are down 4. But what we wanted to get you tuned in, turned on to is, everything to know about today's FOMC meeting. And of course, the press conference with none other than Jerome Powell. People, the initial reaction, I mean, listen, forget about the beginning of the day, forget about anything right up until the point where the FOMC came out. The initial reaction, first of all, no more interest rate hikes for 2019. That's the effective stance right now of the Fed. What does it do? S&Ps explode to the upside. You got to realize we're trading 28.24. Only 3 minutes later, we're actually trading right up here at about 28.42. Remember, these are 1 minute, people, 1 minute candles. So an explosion to the upside inside of the S&Ps, given that the Fed, their initial reaction was extraordinarily dovish. If you've never heard that term, it means, again, it's Groundhog's Day. We're never going to raise interest rates. Now, on top of that, there, of course, was an FOMC press conference with Jerome Powell that kicked off at 11:30. And effectively what he said, well, they're going to stop the tapering of the balance sheet. This is the $4 trillion balance sheet that we've been saying for so long that it is essential for them to start to taper. Well, they're actually going to stop tapering that balance sheet. Effectively, what I'm breaking that down to is the balance sheet hit a kind of a peak of about $4.5 trillion. It's kind of come down minimally. They're probably going to peg it somewhere around 4 trillion. That's it, people. That's all she wrote. They're definitely nervous. They're nervous about Europe. They're nervous about China, and are discussing what they're terming a global slowdown. Although, of course, the Fed did not go as far to say that growth was going to be necessarily impeded here in the United States. Now, with that, the S&Ps, how did they initially react? As I said, they exploded to the upside. We've been fading from it. Why are we fading? You got to get really, really specific over here, okay? What the Fed basically just told you, low interest rates for as far as the eye can see. Well, let's actually take you into precisely what that means. When I say low interest rates, the bonds took off to the upside. The notes have exploded to the upside. I mean, these are huge moves inside of the notes and bonds. What does it mean for interest rates? Now, I want to get really specific over here. This happens to be the TNX, and I'm going to actually put this on a daily chart. Wow. All right, behold, interest rates. This is the 10-year at 2.5. Again, 10-year at 2.5. But there's much more going on than kind of meets the eye here. You have to look at what's called FVX, which happens to be none other than the 5-year. Again, this is the interest rate associated with the 5-year, 2.3. Why do I care? Why should you care? What does this even matter? Well, what I'm actually going to take it to right here happens to be none other than the Treasury site itself. Now, I was talking about this quite a bit on the weekend, last week. I brought this particular site up quite often because what I want you to see is right here happens to be a 3-month. That's a 3-month Treasury at 2.46. Now, this is yesterday's data. I'll remind you, this is yesterday's data, and it's, again, 2.46. If you take a look at a 5-year yesterday, a 5-year was at 2.42, so the yield curve was already inverted. But do you have any idea what today just did to that yield curve? Okay, we slapped that up here. This is now 2.3% against a 2.46 3-month. The 3-month is exceeding, okay, by now a large margin the 5-year. In fact, when you start to compare the 3-month, and again, a little perspective on this particular front, when you start to look at the 3-month, you're only going to be able to compare it to the 10-year. The 10-year is already at 2.5%. Okay, it's a complete and utter inversion of the yield curve. And you know what? Again, what this kind of amounts to over here, decimating the financials today. So the financials, and again, I don't think the damage has even yet to begin in terms of these financials. Just from yesterday's trading session, we talked about seeing a key reversal in the financials, and I talked about that specifically Okay, on Monday and Tuesday here at TheoTrade, that kind of key reversal, we're off the 27 level, people, and we're actually, focused now in hitting the 26. We crossed right through that 2650, that kind of critical level. This right here, the financials, is very likely to start to put pressure on the S&Ps. What's holding us together today? Okay, what's holding us together today? They're just rotating capital right into the monsters of tech. So when all else fails, okay, you're actually seeing us kind of play this rotation game. And in this particular case, you've got asset managers, portfolio managers rotating capital into the monsters of tech, specifically Netflix. Please, Netflix, okay, they've run out of things to buy because Netflix hasn't budged now in months. Netflix has been out of the loop, out of the contest for the better part of 3 months. All of a sudden gets this wild bid to the upside. Apple is right there with it. Apple's actually been on a tear to the upside, but also been flat for periods of time. Again, we're back now buying tech. You also have to recognize Google just received, again, another record fine from the EU. Is it negatively impacting the stock? Absolutely not. Google's actually up by the tune of over 2% today. Amazon also having a stellar, and if you will, kind of breakout kind of trading session. We are now looking at over a $200 move to the upside at Amazon in the midst of 9 trading sessions. Again, 9 trading sessions. For those of you that are contrarians, pay attention here, because right here could be a wonderful opportunity. Again, a contrarian trader would look at this and think of it, hey, this thing is a statistical aberration. You're almost 3 standard deviations outside the norm. If you're going to step in and short something, why not let it be Amazon in the midst of a wild move to the upside? Looking down towards the bottom of the screen, volatility, okay, remains relatively flat through and through. It leaves us kind of in a lurch. All we know at this particular time, bonds, again, are rocking to the upside. It's taking interest rates down. That, in turn, okay, is going to hammer and continue to keep pressure. It's not only about the financials. It's also going to be substantially, okay, Russell. Why? The Russell is loaded with kind of mid-cap or what we term regional banks. Okay, we would expect to see more pressure in the Russell in the days to come. Again, one of the sectors that we continually key in on, of course, is these financials. With the financials headed down, as long as these financials remain down, that is going to produce consistent headwinds for the S&Ps for the near term. Okay, for the very near term, we maintain a rather bearish position inside of the marketplace, given the fact that the headwinds of these financials, okay, coming off the rally in the bonds, is going to be too strong to really look the other way. With that, I want to thank everybody for joining us here at TheoTrade. Net, the S&Ps are going to finish the day down ever so mildly. But again, capital rotation from financials into the monsters of tech sustain this market yet another day. Kind of feel like, once again, his portfolio managers are playing musical chairs. Just don't get caught without a chair when the music stops. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.